Several hurdles remain, however, including resolving differences with the House version of the tax bill, which differs in significant ways from that of the Senate. Both bills cut taxes on businesses and individuals, but differ in the scope and timing of those cuts. The Senate bill would cut the corporate tax rate to 20% from a top rate of 35%. For individuals, it would make tax cuts temporary and create 7 income tax brackets, with a bottom rate of 10% and a top marginal rate of 38%. .5%, down from the current rate of 39.6%. Representative Kevin Brady of Texas, the Republican chairman of the Ways and Means Committee, said that he felt encouraged that the two chambers would be able to align their bills, but that the House would not simply pass the Senate legislation. For as much common ground as we have, there are some areas where we are taking different approaches that will be worked and can only be worked out in a conference, Mr. Brady said. Lawmakers are also awaiting a report from the Joint Committee on Taxation that would show the effects of the proposed tax cuts on the economy. That analysis is important, since it will indicate the extent to which the cuts will bolster growth and avoid adding to the deficit. Outside analysts expect the assessment to demonstrate that the Senate bill does not create nearly enough growth to generate revenues to offset those lost via tax cuts, essentially undermining Republicans' claims that the bill would pay for itself. Mr.Corker, who has voiced the loudest concerns about the bill's effect on the deficit, said on Tuesday that he received assurances that the final legislation would include a mechanism to avoid ballooning the debt, which has passed $20 trillion. While the exact details were not specified, the bill is expected to include some type of trigger that would require certain taxes to increase if the package does not generate as much revenue as projected. "I think we've come to a pretty acceptable place, from my standpoint," said Mr.Corker, who has stated that he would be unable to vote for the bill if it added to the federal deficit. That trigger, however, could complicate the bill's passage. Several other Republican lawmakers, including Mr. Brady and Senator John Kennedy of Louisiana, are resistant to the idea of including a trigger that would increase taxes. "I'm not too keen on automatic tax increases," Mr. said. "I'm just not too excited about this idea of automatically tying our hands." Americans for Prosperity, the conservative group backed by Charles G.and David H. Koch, also blasted the idea, calling a trigger mechanism antithetical to the principles of the unified tax framework that lawmakers have proposed. Other holdouts, like Mr.Johnson, appear to have been swayed by admonishments or assurances. Mr.Johnson objected to the bill on the grounds that it did not do enough to help so-called pass-through businesses, which pass their income on to their owners. During lunch with Mr. Trump, the president chastised Mr. Johnson over objections he raised in the meeting, telling the senator at one point, "Come on, Ron," according to a person familiar with the discussion who declined to be identified because the event was not public. Mr. Johnson voted for the bill on Tuesday, telling reporters, "The good news is, everybody agrees it's a problem, it has to be fixed." "I just keep getting assurances it's going to be fixed. I just want to see how. Other Republican senators who have been skeptical of the tax bill also appeared ready to back it. Ms. Collins, who has not yet thrown her support behind the bill, said that she felt more optimistic about the plan after meeting with the president. "I believe that a lot of my concerns, it appears, are going to be addressed, and that I'm going to be getting the opportunity to offer amendments on the Senate floor," she said. Ms. Collins said that the president was supportive of her wishes that $10,000 of property taxes be deductible under the Senate plan, a change that would be similar to the compromise that House Republicans made on the repeal of the state and local tax deduction. She also said that Mr. Trump was supportive of backing legislation to help stabilize health insurance markets under the Affordable Care Act, which she said would help mitigate the effects of ending the law's requirement that most people have insurance, as the tax bill would do. Senator Lamar Alexander, Republican of Tennessee, said that Senate Republicans were increasingly united about repealing the requirement that most people have health insurance or pay a penalty. He said that Mr. Trump was very involved in the details of the tax package on Tuesday and that he took several questions from senators. Both Mr. Alexander and Ms. Collins demurred when asked whether they would be concerned if the Joint Committee on Taxation report showed that the bill would increase the deficit even with additional economic growth. "I'm not going to be hypothetical about that," Mr. Alexander said. Democrats on the Budget Committee assailed their Republican colleagues for shedding their deficit hawk feathers and backing a bill that they say is fiscally irresponsible. Many Republican senators left after protesters disrupted the meeting, chanting, "Kill the bill." Acknowledging that a final vote was most likely days away, Democratic leaders appeared to have few procedural maneuvers left to slow the progress of the tax bill. Our Republican colleagues, in their rush to get a bill done, are legislating in an irresponsible way, especially when it comes to something as important and complex as the tax code, said Senator Chuck Schumer, Democrat of New York and the minority leader.